You've been a strong proponent of gold in the portfolio, right? And that's done massively well for people this year. What's the take from here on?
Yeah, so I've been a big bull on gold. I mean, my basic view is at least you should have 10% allocation in gold. The 20-year performance of gold is very similar to the Sensex returns, roughly 14% CAGR. And you can take any period, 1 year, 3 year, 5 year, roughly gold has matched Sensex. Maybe there are periods where Sensex has done better and there are periods where gold has done better. But the point here is more on asset allocation, and the other thing which people underestimate, that gold is a hedge against the currency also. So if our currency over 5 year, 10 year depreciates at a CAGR of 3%, this is a hedge which gives you that return plus the gold returns. So as I said, I've always maintained that the Indian woman is the best fund manager. By just buying gold, she has outperformed most fund managers over the last 20 years. And we keep cribbing about, some of my, male fund managers who don't like my comments, saying that, this is India's current account deficit is going out of hand. Gold is because of gold imports. Yeah. But people don't realize that the gold loan market is now almost 8 lakh crores.
Yeah.
So the argument that this is a lazy asset, doesn't generate any economic value, is also proved wrong because of the huge gold loan markets that we have. I can go on and on this, but the simple point is at least you should have 10%. If not, if you're not there,
despite the run up, fresh buying is absolutely okay.
Our markets have also run up, right?
That's true.
Yeah. So it's a question of, it's a store of value.
Yeah.
And if you see what has changed in the last, say, 2 years, is that central banks have become very aggressive. And I think that is also coming from what happened to Russia after the embargo, and US suddenly closed the currency market for Russia. So most countries and central banks feel that what if this happens to us someday? So if you see, a lot of central banks have started to add gold, but irrespective of whether central banks add or not,
you should add it in your portfolio.
Yeah, you can't predict that every year it will give you the same return. Same with our markets. I mean, if I remember right, in the last 20 years, gold has had only 3 down years. So it's been a very stable asset class.